Welcome back to the Ticker Trader News Briefing. Today we will be discussing and dissecting Chairman Powell's speech at Jackson Hole last Friday. Markets closed the week with a strong rally after Chair Jerome Powell's remarks. What stood out wasn't a dramatic pivot, but a subtle shift in tone that markets immediately priced in as friendlier. He acknowledged that inflation progress has been real, while also highlighting that the job market is softening at the edges. That combination reframes the Fed's risk balance. Instead of speaking only about fighting inflation, Powell positioned the central bank as weighing both sides. Don't let inflation reignite, but also don't ignore cracks in employment. The phrase "proceed carefully" was repeated, but the emphasis was different. There was more space for cuts if the data warrants it, and that was enough to ease Treasury yields and send equities higher. Importantly, this wasn't just a mega-cap tech rally. Small caps and cyclicals led the charge, and that breadth is exactly what investors have been hoping for after months of concentration in only a handful of leaders. Breadth means healthier participation and less fragility. Now, what are the outcomes? Bond markets reacted instantly. Front-end yields came down as traders upped their odds of a September cut. Equities ran with it, with industrials, financials, and discretionary sectors joining in. Globally, the dollar softened, and risk appetite spilled over into Asian and emerging market assets into the Monday open. Gold held a bid as real yields slipped, and credit spreads tightened modestly. But here's the caution. Powell did not declare victory. He reminded us the Fed remains data-dependent. Inflation from tariffs could still pass through, service prices remain sticky, and any hot jobs or CPI print could quickly swing the tone back. This is why sizing matters. Respect the bid, but don't oversize positions on the back of one speech. Markets love to front-run the Fed, and futures are now pricing a more dovish path than Powell actually committed to. If the data doesn't align, that gap will close, and it could be painful for anyone who chased too aggressively. So, the big picture? Powell opened the door to easing, but only carefully, and only if conditions support it. For investors, this sets up a tactical window where breadth improves, small caps and cyclicals can play catch-up, and quality growth still maintains its leadership. The playbook is participation with discipline. Bonds can drift lower in yield, equities can broaden, gold can hold support, but all of it hangs on the next few data prints. The Fed has shifted its balance, but it has not handed the market a blank check. That's the key message. The rally is real, the tone is friendlier, but this remains a data-driven Federal respect the move, stay invested, but keep risk sizing measured. That's how you survive the inevitable swings that follow Jackson Hole. Disclaimer: this video is for educational and informational purposes only. It does not constitute financial advice, investment recommendations, or guidance on trading. All opinions are those of the presenter. Viewers should conduct their own research and consult a licensed financial advisor before making investment decisions.